Ladies and gentlemen of the crypto space, we're live on a Monday, November 11th at 11:46 a.m. And this chart is very popular right now amongst the investing world for all the way from equities and ETFs to the crypto space and the centralized exchanges. I mean, it's obviously popular on the perp exchanges. This is a very popular chart. This is Bitcoin, ladies and gentlemen, coming in at a whopping $84,315, more popular than ever, literally by valuation. And I wanted to remind folks of a very historic story that we talk about, cash and cash flow. So, over the last couple of years, we here on this channel, and by we, I mean I, have told the story of Bitcoin being a type of cash. Rather, you have a cash part of the portfolio and an investments part of the portfolio. So, what is different ways of thinking of capital? Clearly, cash is different than an investment. Cash is something you could use to buy something. You could spend cash. And it was more difficult historically to spend things such as Bitcoin or Ethereum or a Solana or an ARB. This is all last couple of years that these assets have existed, not Bitcoin and Ethereum, of course, or an OP. But nowadays is pretty ubiquitous. You could pretty much pay with these assets using debit cards, cryptocurrency specific debit cards that are very friendly nowadays between Spritz Finance and what Juno was offering. And didn't Avalanche come out with a debit card? I don't know. I don't know. But it looks like Linnea is doing something because consensus want they all it's all payments. It all comes down to payments because as you break down the frictions to engage in this kind of behavior, it increases the likelihood of consumption. So cash and cash flow. The cash part of the portfolio should consist of stable coins because those are useful for purchasing things, as well as Bitcoin, which is useful not only for purchasing things, but also as collateral. You could borrow against it, and also as savings because it is not a stable price. It's a volatile price. So these are great components of the cash part of the portfolio. Ethereum has been underperforming, but it is quite collateralizable. Therefore, it remains quite useful. And you also need to have it because if you want to engage in crypto markets, predominantly EVM networks, you need to actually have Ethereum. So you need it for gas purposes, okay? Capiche? um, what does this mean from an evaluation standpoint, especially in hindsight, from let's say a 4 to 8 year period? If you're inspecting your the amount of capital you have, total net worth, quite misleading and hard to really get a grasp of it. I often think because I had a fair amount of Bitcoin at like $280 and I sold it at $590. And this was a long time ago. And I had a lot of Bitcoin. It must have been 20, 30 Bitcoin. Now, I remember having that amount of dollars back then, and I was young. This was a long time ago. It's a very different person. I didn't have the career I have now. I didn't have the savings or the available cash in like a checking account. So that was a fair amount of cash, and I ended up using it. So that is not the same story as the 16-17 cycle, as especially the 2021 cycle. There was much more cash available. I was older. I had more years in industry. I had more shit that went into a 401k that went into rollover IRAs that I just paid penalties on, and you reallocated capital. So you can only look to hindsight so far and be like, fuck, I could have done better. Because you probably did okay considering the situation. The story is very few, and you cannot compare to the few. The few that had like 20 grand and bought 20 grand with a Bitcoin at like 250 bucks. Although there was a lot, you needed to be older. So I'm 40. So those folks that probably had like 10 years on me and that were that far into industry are about 50 now. So it's a different, you got to understand, the younger, it's just like trying to understand the psychology of meme coins. When you're younger, you're less risk adverse. So people were attracted to very different things. Back when Bitcoin was 280, there was a whole lot of Bitcoin forks in that cycle, and it was all just QT forks. It was all just Bitcoin shitcoins. That was the entire cycle, and then 16, 17 it was Ethereum and the ICOs, and that's what attracts the younger. So there's the few, very few of those population groups that have had an old quantity of Bitcoin. Very few, and that's like important to understand about meme coins as well. It's like 0.5% of people that engage with meme coins have anything to say with regard to gains or winnings. So, what's the point here? What I'm trying to get at is I could have had much more Bitcoin, but the best outcome is not the total quantity of Bitcoin because that's important, but you need a functioning portfolio. You need both because you need to buy Bitcoin also. And for that, you need cash flow. So, cash flow is obtained from working and having a career, which allows you to buy more Bitcoin, or owning businesses. You could own a pizza shop, you can own a Burger King, you can own a business, you can own a Target or a supermarket. So, what businesses do you own? Because the question there is do you want to work or do you want to own businesses so other people can work for you? Real estate was a little easier pre 2020. Maybe you have two, three homes, and that's cash flow, and you're buying Bitcoin using that cash flow into 2019, starting 2020. And that was a nice place to park that cash flow in 2019 because Bitcoin significantly appreciated in 2020. The well structured portfolio is the goal. MicroStrategy. That's a well structured portfolio. Let's break them down. They keep buying Bitcoin. Why? How? One, they're a public company, which means they can issue debt. You can't do that. So that's out of the equation. You cannot issue debt like they can. You cannot issue dilute shareholders. You cannot execute what Michael Saylor is executing. So just invalidate that as a comparison. But they have a functioning software business also with cash flow. And what do they do with that cash flow? You're able to service debt obligations. You're able to purchase Bitcoin with accumulated capital. The reason MicroStrategy is what it is and has the amount of Bitcoin it has is because of one, its cash flow, and two, obviously, its capacity to raise debt. So you can't do the debt component as a private citizen, but you can do the cash flow. You need cash flow unless you want to work forever. Obviously, I guess there is a threshold if you do some computation and expect Bitcoin to increase into the future in perpetuity, where if you have like a couple of mil worth of Bitcoin and you could borrow 10% of it per year, but then there's a risk of that. What happens if you borrow too much? What happens if you miscalculate? So, in theory, if there's a CAGR of 30%, then you can borrow 10%, 20% per year. Maybe a little risky, push it 20%. What if you miscalculate? If you borrow 10% means Bitcoin needs to go up every year 30%. And you got 3 years because it's 10%. Then the next year it's 20%. Then the next year it's 30%. At least additive. Um, so the point there is probably want to borrow even less, probably like 7%, 7.5%, right down the middle between 5 and 10. So if you borrow 7.5% of Bitcoin against your Bitcoin per year during the Bitcoin bear market, okay, you got to get the numbers right. So that's not so easy. So you probably don't want to be spending the money that so you need more. So you had $10 million worth of Bitcoin, you could buy 3% against your Bitcoin per year. All right, fine. So so do the numbers. If you're buying 3% against your Bitcoin and you have $1 million, you're buying $30,000 a year. Can you live on $30,000? I would imagine most people in the United States can't. So that invalidates $1 million worth of Bitcoin being you're being you able to be a Bitcoin maximalist and just have Bitcoin, borrow against Bitcoin. Bitcoin's CAGR is 30%. You're borrowing against Bitcoin, it's going up, and that's cool. That works. But 30 grand probably doesn't cut it. So probably you need more. So let's say you need 120 grand, and that would be 12%, and you can't borrow 12% against your Bitcoin per year. That calculation doesn't work. So if you want to borrow at 3% of your Bitcoin stack per year, you need four times. You need $4 million worth of Bitcoin. Who the fuck has $4 million worth of Bitcoin? That sure as hell is a minority. So that whole equation that folks have said, just borrow against your Bitcoin, doesn't isn't necessarily easy unless you have a significant quantity of capital in Bitcoin. So there's other types of cash flow. So I would argue, and I do argue, and I put my money where my mouth is, that a better portfolio for the majority isn't just Bitcoin. It's actually attempting to simulate a successful business operation. And I stick to that because there's something that uh, makes sense about it. Living your life as an individual, but structuring everything financially as a business with a balance sheet and cash flow and savings and investments and a business structure and defined rules. So that makes sense to me. Something about that really makes sense. So what do you own? You don't have to invest in all coins. You don't have to invest in stuff that's underperforming Bitcoin. You could buy a freaking Burger King. I'm cool. I think that makes sense. I'm cool with recommending that. As long as there's a structure to what you're doing, where there's cash and cash flow, that meets the captain's criteria for meaningful way to execute capital management. I just happen to think that a lot of things in the crypto space are quite extraordinary from a cash flow perspective. That may actually be better than real estate. Sure, absolutely. Real estate is literally the shittiest investment I could possibly think of from breaking down the numbers, especially at these prices. I mean, you could probably still execute from a flipper's perspective, but shit, that's a lot of work. Where's the low work, the low overhead business? That is by definition what the DeFi space is. It's a low overhead business where there's no infrastructure costs and no OpEx, no CapEx, no nothing. So that's always been my argument there. So evaluate two components of your portfolio distinctly. I think that's a first thing that's very important. Meaning you're like, oh, my altcoins are underperforming, my investments are underperforming. Yeah, great. It's part of your portfolio. And you can't just have a portfolio full of money. Why? Because of the entire conversation we just had. Okay. That's a separate part of the portfolio. You should have your Bitcoin. You should have your cash, part of the portfolio. Bitcoin, Ethereum, and stable coins. And if you're depending on your risk tolerance, maybe a Solana or whatnot. That's besides the point. But that's cash, because you could spend it. Okay? So we are pumping because this channel, Captain's channel, is not about altcoin investments. It's not about Bitcoin investing. It's about being a well structured capital manager. You want to be your own MicroStrategy. Do you have a balance sheet? That probably starts with first defining what you expect from your balance sheet, define the rules of how you operate your business. There was a long time during the bear market. That's all I talked about. how to structure your business. And we talked about all the business rules that I've written over the years, whether you want an LLC, whatever kind of corporation you want, or a trust or whatnot. But that's very important because that's your measure of success, ladies and gentlemen. That is something I tried to really drive home over the last couple of years. The measure of success isn't how much money you make, because there's going to always be someone that makes more money than you. There's going to be always someone that has a better structured business than you, or has a higher net worth than you. So, how do you measure your success? You measure your success on how well controlled you could keep your anxiety and how well and consistent you could execute your capital management methodology. And that is something I've really come to think is an excellent approach to capital management: consistency. Cash and cash flow, ladies and gentlemen. And in that regard, I'm quite content with the quantity of Bitcoin that remains, that I still have, because I needed capital. Capital between savings, capital that was available over the years to acquire that cash flow, to build a well structured business, modeled business, because clearly I'm not standing behind a cash register as a manager in a Burger King that I own. So what's the difference? This is a business. If it's modeled as a business, it's still a business. Okay. Less Bitcoin, added cash flow. That is more than acceptable, in my opinion. So HG says high cap cash flow is king, but why we're not pumping? Because it's not just cash flow. And that is why I wanted to talk about this topic. Bitcoin's doing what very well, 84,486. Everyone should have had, because we've literally been talking about this for years. Doesn't mean you should be all in, because then you just have cash. Then you have no cash flow. Then you don't know how to manage a balance sheet. Then you don't have a well structured business. Then you haven't defined your business rules. You can't just have cash. You want to run a business. So, from a DeFi standpoint, you got to understand psychology and the whole structure of politics and the whole structure of global economics. And that's also the story we've talked about for years. So, right about now, you guys want to hear a macroeconomic story? Because this bull market hasn't even started yet. So let's break it down. Let's break down where we are based on a couple of different uh, considerations. One, macroeconomics. This bull market hasn't started. The dollar is at 105.5. It is ripping today. There is no global liquidity bull market with the dollar at this level. Okay? So Bitcoin's outperforming. It's Bitcoin. Of course it's outperforming, and we all should have had exposure. And I've had exposure, and I've encouraged folks to have exposure. Great. It's cash, cash position of the portfolio. So the move indicator is barely where it needs to be. When the move indicator and the DXY finally roll over, do you have any idea what the Bitcoin price is going to be? Oh my God. So we are exposed right now, hopefully optimally, to this market that's doing very well. Now, you may be underperforming because the entirety of the portfolio between the cash and the investments, only the cash is doing well. The investments are underperforming relatively. That's okay. Don't mismeasure how to measure success. We measure success here, with consistency of execution of a rigorously constructed business. Okay? Cash and cash flow. So, sentiment wise, meme coins are still on fire. Dogecoin leading the charge, big multiples there. The meme coins would be part of the cash, part of the portfolio. Okay? Those aren't investments. You could consider them cash. And if you want to like change your denomination, well, meme coin traders are literally forex traders. That's all it is. You're changing the denomination. Whether you call it a currency or a meme coin, it doesn't matter. You're just swapping using an exchange, which is basically a forex market. So if you're a forex trader, that's cool. That requires a lot of work. Godspeed. So meme coins are a type of cash. clearly increasingly volatile currency units as compared to that of Bitcoin, but they are significantly outperforming 30, 40% to such a degree that I believe I did retweet Max from McCoy's Bitcoin because he, of anyone, looks at those meme coin charts and they have some great parallels. The He gets it. I find it interesting. I don't need to play along. I can watch it on TV, so to speak. I rarely retweet anything meme coin related. Let's go back to the chart. So macro's not playing along. Meme coins are still fire. So what does that leave us with the psychology of the situation? Psychology of the situation um, is the election, is the stock market, which is still ripping up. Look at that. Russell 2000 up 1.67%. That's pretty interesting. So what drives capital into these crypto markets? That's probably not the most important thing to contemplate. What's most important to contemplate is how to inspect um, if capital is coming into these crypto markets. So let's start with that. Now we go to the llama. I did a post yesterday talking about the amount of capital inflow onto Ethereum mainnet. And I thought this was a very big deal because this really means something. You don't go from 83 billion to 89 billion, okay, without it meaning something. That is a larger capital inflow than all money on Solana, all money on Base, probably all money on Arbitrum as well. It's probably close. That's $4 billion onto mainnet. So what does that mean to you? It's clearly monetization. Why is capital flowing in? It's flowing in opportunistically to engage in financial activity, maybe credit, maybe trading, foreign exchange, exchanging things using on-chain dexes. I don't know. That's the whole point of financials, and you build fintech products that people want to use. And how do you know if they want to use them? They actually use them because you can measure the amount of capital engaging with a financial product. So, what's the precursor to engagement with a financial product? Capital being present. So, fortunately, crypto is an economy unto itself. It's like a nation state. And you can see the amount of capital flowing into the market. It's not like, capital flowing in from Asia to the US, and you're like, where the hell is the capital going to invest? It's a whole country. This is capital flowing into a relatively isolated market called Ethereum mainnet. More money than the entire capitalization of Solana, stablecoins wise, which is all that matters. And you know why. So that's a big deal. So these are forward looking indicators. If capital is coming in frankly record amounts, that is a massive, massive bump in capital. And we've never seen that amount of capital in such a short period of time, all the way back up to 21. There's no bump like that as a forward looking indicator. Okay? Because what do you do with capital? You're going to let it sit there. Capital's going to do something. All right. So the appropriate thing to do is to know that you own shit. You own shit. And eventually it's going to get monetized. Because what do assets do? People buy them. And we've been discussing for years now why people would buy them. What is the narrative? What is the story? What is going on? What is the significance of the assets that we have looked at over the years in the grand scheme of things, in the big picture? And this big picture, they're already in place. Hardest thing about capital management is it gets boring and you think you're underperforming. Harder thing about capital management is not just conviction. It's know what's going to play out. Obvious. What are the businesses? We've been asking the right questions because when you're thinking of investing and you're actually an adult and you're responsible for other people's money, you have a fiduciary responsibility, venture capital, hedge fund, what have you. private capital, whatever you want to call it. There's a responsibility there. So there must be a reason to allocate capital. It's not just memes. They're not deploying to memes. There's no reason to deploy to memes other than number go up, which is a reason just not for capital that is responsible for other people's money. So that's where the investors come in. So guess what? You were an investor before the big investor money comes in because you were thinking, what is an investment grade asset prior to the hedge funds and the venture capital coming in to say, okay, this is investment grade. So you were early and everything else is moving while we wait for the market to catch up. That's the way it is. That's the deal. That's the way it always is. And that's just fundamental psychology. And it should be obvious that's the way things play out. Because humans, if anything, are extraordinarily predictable and consistent for that matter in their irrationality. That's why our rationality puts us placing quarters on the train tracks rather than throwing quarters on the train tracks. I mean, literally have a fully structured portfolio, cash to cash flow into this craziness. You know how many people right now are literally frantic? Bitcoin's literally just going to rip past 85. It's just going to, people are like, what the hell do I do? I missed the boat. I'm late to Bitcoin and it's ripping and they're frantic, trying to buy, trying to figure out what's the right thing to buy. No, no. That's not what the experienced person does. The experienced person is done. The experienced person placed their quarters on the railroad tracks and now is going to wait for the train to come through and to see how the quarters respond. Because if you hit a quarter, you got the right railroad track in the crypto space. That's a big deal. And you get some serious monetization. I mean, come on, I can only get excited about the potential monetization of certain things, certain real businesses. And you can almost look at these things as banks, and that's why we discuss them as banks. So how do you think fintech, how do you think venture capital and the big money is going to look at them? We just saw it for what it was a little bit earlier than they did. You're on X and or on YouTube, please feel welcome to say hello in the chat. If you have any questions, I'm more than happy to get to anything that's on your mind. We may keep it short today. It's obviously light in the chat. Yesterday on Sunday, we had a fun day. It was 834 people, and that was the largest stream I've ever held. I think I need to start doing streams at night, certainly on the weekends. I think everyone's at work. Okay, so that's pretty interesting. If the streams are, that's a deductive assessment. If people are at work and I have a lighter viewer count during the week and it's a bigger number on the weekends, that means people are working, so they should take their income and turn their income from working into a structured portfolio of cash and cash flow so that one day they don't have to work. And this is basically retirement preparation. Now, historically, and I recall this vividly from when I was younger, what was retirement preparation? Mm, dump it into a 401k, and oh, if you're lucky enough, the employer does a match. You know what, 3, 4% employer match. You're not getting anywhere in the stock market because with a 401k, you're not investing in Bitcoin. You're not investing in anything that's going to significantly outperform, uh, you know, the expansion of the global currency supply, the debasement of the currency, quote unquote. So that's why this conversation we've had over the last couple of years is also important. And I have only hoped I could reach more folks. So I think those weekend streams might be more important than these weekday streams. Or maybe I change them to the nighttime streams. I don't know. I don't know. Anywho, Sir Joe, present. Jeremy, hello. Curve equals cash flow. Curve equals cash flow. But so curve has evolved as a narrative in my mind. I'm not too keen on the dexes on foreign exchange. And in that regard, I would go to aerodrome, velodrome, and kingdom. That's it. Like I'm more interested in those exchanges from an exchange standpoint. Okay. So where does Curve's exchange come in from a Curve product perspective? It's full stack integration. They have the whole vertical. They have a liquidity financing system. They have their own exchange to manage their dollar. Holy shit. So the biggest business on the planet is dollars. That's it, period. That's the thing that I have reduced to being the most significant potential investment in these crypto markets, dollars. To me, it's the most contrarian, and to me, it makes the most sense. Most people don't understand dollars. That's it. Therefore, if you understand dollars, you're like, holy shit, these guys are making dollars because that's what dollars are. And that was the biggest realization I've ever had of what the hell a euro dollar is and how the banking system works and how liabilities and assets create a balance sheet from a banking standpoint. And then and then there was the stable coins. I mean, it wasn't like the USDC and the USDT. We're talking about the dies and then the redemptions and the liquidations and then the liquidity and then the magic internet money and Key Dow came online for a couple and did okay. And the fracks. And this was 21. Okay, guys, this was 2021. And now you have USDS and real world assets and what Ondo's done and all these treasuries and even Frax has their treasury components to the protocol. What is a dollar? What is an actual dollar? And frankly, CRVUSD is a goddamn good dollar. It's a really good dollar to such a degree that it's quite fascinating. And it's I understand completely that it's not as understood as it will be because it's a big deal in my opinion. The same with money. Money is a good dollar because it's literally the CRVUSD dollar. And then it plays out with like forks and whatnot. If it's all about lendiness, because all a dollar is up to how how accepted it is and how used it is, how held it is, and who's willing to pay for the dollar to exist. Because, ladies and gentlemen, the dollars of the planet Earth exist because people and corporations, which are people, are paying for the dollars to exist. 99.9% of all dollars on the planet have an interest rate associated with their continued existence. And that is why cyclically people need to invest to outperform in order to earn gains and income to be able to pay for the dollars in the system to continue to exist. And that's why they say that debt financing or the debt based currency system needs to keep expanding. And that is the case. So this is destination inevitable that everything in the crypto market runs multiples. Okay. So the question isn't really what to buy. You could buy the shittiest meme coin and it's going to run multiples. Okay. I mean, not the shittiest. I mean, you got the rug pulls and whatnot. Okay. So let's not go that far. But anything of substance, it's gonna run multiples because the whole fucking currency supply is gonna run multiples. So how do you outperform that? You outperform that by actually making a decision, a choice of one thing versus another, of something with increasing substance as compared to something else. In that regard, it's dollars. That's it. Hope that helps. Dollars are the biggest business on the planet. There's nothing that compares. Not foreign exchange, not the United States tax system, which is basically an incentive regime, because of the tax system, the U.S. government can do tax. Okay, hope that helps. Um, where was I? Ergo, hello, IW, hello. Mask Meta, great stream. Let's get monetized. Yeah, I'm right there with you, my friend. Peter P. Hey, Cat. I work with asset flow to be able to turn that to cash flow later. Yeah, that is quite reasonable because portfolio size is quite critical. Smaller portfolio sizes need to engage in capital gains to have significantly more appreciation as compared to what cash flow can offer. It's all about CAGR. At the end of the year, that's the hard thing because people are wanting returns in like a weekly period or a monthly period. They want to see, oh, I got rich in a month. All right, so from a yearly perspective, every year, December 31st, measure your CAGR, compound average growth rate. Where are you? How well have you done? And the CAGR is not the most important thing because we've been saying this entire stream that the most important thing is just consistency, having a structured portfolio of cash and cash flow. And the CAGR is just a way to measure how, just it's a statistical value. So, for instance, if you're coming out at the end of 2024 with a CAGR from 2019 of 50%, you outperform Stan Druckenmiller, okay, for what it's worth. So that might be disappointing if you have a $500 portfolio. So to see here, this is why it's all relative, because a $500 portfolio at a 50% CAGR is probably one of the best rates of return in the entire investing world, but that is disappointing because he turned 500 into 750. But if he had 10 million and he turned it into 15 million, holy, in a year, that's the average compound average growth rate of that before a 1 year time period. So portfolio size means a lot. So you don't want a 50% CAGR, you want a 50,000% CAGR. That just is just pure gambling. So you don't have to gamble. You don't have to believe that the folks that talk about meme coins, that, that the kids, the alpha and the Gen Z are just they're past the point of no return and there's no hope. There's plenty. Just be smart. Don't be dumb shit. Go to school, get a good job, and you don't have to get the best job. You can literally be the captain at Best Buy Geek Squad, but be calm and reasonable and stay at home and invest all your money. Like I would love that. I would love if I often think about that. Compared to the path that I've taken, what if my kids, and this is probably not the case because that's relative to now, and they're not going to be in industry for another 15 years. Like, but if they graduated college right now and they went to work at Best Buy for 55, 60, I don't know, whatever the hell it is, 60, let's say 60 grand a year. And they stayed at home. I said, hey, son, well, I have daughters, but the point is, hey, son, stay at home until you're 30. Oh, dad, that's a long time. I want to party. I want to have fun. But stay at home. Trust me. I've been there. And all right, I think this makes sense to me. And my son stays at home until he's 30, and he's taking a 60 grand a year, and he's investing all of it. He's done at 30. Done at 30. You know how much money you can have at 30 if you're investing 60 grand a year compounding? So first off, that's a 100% CAGR in the first year just from reinvestments. Okay? You understand that one? So there's food for thought there. I don't know. I digressed a lot, IW, but I like thinking about that. If I had, I'm in my 40s, but if I had that 20 years back, I wish I can only hope that my kids listen to me. They never do they? I can only hope they will. Arrows in the house. Still don't feel FOMO not having a cash component of my portfolio. Just have BTC in my IRA and cash. Yeah, that's cool. Um, I as well. So that's fine. And just woosah, woosah. It's nothing you could do. There's no radical adjustment you can make. No, like, oh, I made a mistake and I got to do something else. You got to do is realize just because this week is different than last and everyone's running around like chickens without heads at Bitcoin of an $84,613 price point doesn't mean you have to get crazy. We've been screaming to ourselves for the last years, now's not the time to get crazy. We've been screaming that the last years, now is the time to be like, all right, let's see what we just did for the last couple of years. Now we're prepared. You know why we're prepared? Compared how prepared you are now to 2019. Okay? So much better prepared than 2019. Oh. We'll have some good stories to tell in a couple years. Peter P, your streams have taught me a lot. Many thanks. You are very, very welcome. I'm very proud when folks say that. I can only hope make a difference. Just like I think with my kids, because stuff that I talk to you guys is stuff that I could convey to my kids to get older. So you're welcome. John Steps, morning Cap. In your opinion, what are your top three most promising cash flow opportunities for this cycle? Is cycle. I don't think in terms of cycles, and that's the complexity. I'm already out, like, post 2030 it gets complicated for the reasons Ralph Powell talks about, and I agree with that time horizon in many regards. But I'm pretty much like two cycles out. I'm thinking of 2032. 2032 is another 8 years from now. I'll be 59. All right, great. 49. I won't even be 50, so that's fine. All right, good. More than capable of waiting 8 years. Um, Give me another two cycles. It's all good. So the most promising cash flow opportunities right now might not even be the most promising for this cycle, but it's the thing I want to own because I want to be consistent and I want to put my money where my mouth is. And even though the money's dirty, that's such a horrible metaphor. I just, that's what makes me happy. That's what makes me feel comfortable. That's what alleviates all my anxiety is that I got this whole thing in a structured headlock to the point where it's even documented on how this thing is supposed to operate, which is actually quite a burden from a family perspective because that's some complicated documents. Right now, my documentation for how my business operates is 70 pages. Good luck to my family executing that. I don't know. I can only hope. I can only do the best I can do. And believe me, that's one of the things that keeps me up. Whether they'll understand the things that I've written, but all I could do is literally write them. All I could do. So that's the thing that gives me anxiety. It's not these investments. It's not owning these things. It's the things, whether I'm prepared or not for the everything. I am certainly prepared for Bitcoin to go up in price. I am prepared for all coins to go up in price. I am prepared for the DeFi space to be monetized like fintech products, like banking infrastructure, like forex markets, credit products, derivatives products, dollar liability, banking type products, and liquidity financing. I prepared for all that. I have nothing to do. I have full exposure to all that. So it's the things that I'm not prepared for that worry me. Okay. Hope that helps. Frame. Hi, Cap. What do you think about owning a perp exchange business? I noticed you really mentioned those. That's fine. That can be a good business. Look at GMX and stuff like that. And you don't have to be hot hands Arthur. He's just an ruthless investor. And that's fine. When you have that kind of capital and you've been that kind of serial entrepreneur, you just be ruthless, predatorial investor. That's okay. That's fine. You can own plenty of things. No one knows where these things are going to be in 10 years. What if GMX is the most incredible investment in 2032? What's pertinent is position size. And what if it's not? What if it's not the most incredible investment in 2032? And that's why we construct a portfolio when we expect. a good portion of the portfolio to not be the best investments in 2032. But all you need is a couple of things to be incredible investments. That's what investing is. That's what venture capital is. Venture capitalists just need a couple of things to hit big. Okay. So a perp exchange is fine. What's pertinent is, some of the rules. Just make sure you target the best properties possible, like fuck you, pay me, immutability, exposure, meaning hopefully the perp exchange is going to be exposing you to many markets, just like the conversation I have about velodrome versus aerodrome. By owning velodrome, I'm for free going to have exposure to the entire optimistic superchain rather than having exposure to just Coinbase's arbitrage engine. That's a choice. Now, in hindsight, it would have been much better if I just bought velodrome earlier because then I would have had free exposure to Base as well as the entire optimistic superchain stack. Okay, so that's that story. Yes, I am coping about lack of aerodrome exposure, but that's it. Needed it is what whatever. You think it's not a sustainable business? No, it's fine. It's gambling, it's speculation. So gambling and speculation are very big components of society. Okay, that's that. It's just be consistent and get the position sizes right. And just remember, an inadequate position size also invalidates a position. So obviously that implies the smaller portfolio gets, you probably can't even invest. Forex investing isn't investing. I call it, it's more so trading isn't investing, trading is speculating. So without an adequate amount of capital, you can't really be an investor. And you got to do the calculations. And the calculations are very simple. It's X, Y, and Z and APR. That's it. That's all it is. If the APR is $5 a year, probably shouldn't invest. Um, I find it best to assess and think about portfolio gains in percentage versus dollar terms. Yes. Well, yeah, that's like a CAGR. What's your compound average growth rate at the end of the year? And then measure. Because at the end of the day, you want to really get a CAGR for a couple of years. And that's really going to assess how well you're doing from a multi-year standpoint. Arrow, nice to finally see some positive improvements with Nile and Nair. Yes, indeed. That's just is that not expected though? So obviously we're disappointed by the depreciation, but we bought it for consensus, which is Ethereum. Now, what's my mistake there? What was my mistake with Nile and Cleopatra? Should have just owned Ramses earlier, and I would have had free exposure. Okay, so that's the same thing with the scroll. Should have made sure I locked my shit. Exposure's everything. And if you can get shit for free, that's akin to like stupid 401k employer match or an airdrop. Get your free exposure. That is probably the biggest thing I think as an opportunity in these crypto markets because these markets are going to get monetized like no country has ever gotten monetized. Accessible to all countries, but of no country. That's crazy. Peter P, I am young. My plan is to invest everything up until around 2029. I will be retired off cash flow. Um, You have a much greater chance of being retired off cash flow than ev- almost everyone. I mean, most people don't understand it. Most of the people don't understand you could buy a salary. What does that even mean? So you work for a salary, but hey, James, did you know this motherfucker on YouTube saying you could buy a salary? What the hell's he talking about? Buy a salary? Buy a salary. And then to top it all off is buying a salary in a speculative environment. So you diversify and you own exposure in these crypto markets, and there's a greater chance than not that one of these exposures is going to monetize significantly. So odds. There's an odds that none of it monetizes. There's an odds that the damn electricity turns off. And you go into the garage to get a shotgun, you got to go into the forest in the backyard to get dinner. There's an odds that happens too. The most important thing you could do is meet your expectations and be prepared when shit goes south. What's the odds of that? Because that's what I told you. That's the only thing that I have anxiety over. It's the shit that I wish I could prepare more for. Like I can't make my family understand what I do anymore. It's out of my control. Those are the things that give me anxiety and fear. These markets make me excited because nobody understands them. I do. Peter, children do not listen at first. We have to fuck up on our own before we really listen to our parents. Well, I could state that firsthand. That was me. All right. I'm 40 at this point. Yeah. Sometimes you always think, would I be who I am if I didn't do what I did? But I also think, how the hell am I still alive today? That's another story, or maybe many stories that I'm not going to tell anyone ever. I will go to the grave with a lot of the stories. If I listened to my parents, I would be retiring the cycle. Yeah. Could you imagine if you're like 18 and you're done with high school and you get a job at like a Chipotle and you make like 30 grand a year and the 18 and it's like 20, it's 2017, and between 2018, 20 and 19 you invested 60 grand into Bitcoin, and you're 20 years old with 60 grand in Bitcoin at 3 grand, and the 60 grand goes 30x on the money, and you got 1.8 mil at 20 off of working at Chipotle and living at home. That's what I'm saying. Ladies and gentlemen, do you realize that number right there is 18, 19, 2 years, 30 grand invested for 2 years? That was what the multiples would have been. What do you think these numbers are going to be in 2028 and 2032? Only hope my kids stay at home. Anywho, ergo incumer cheat sheet for the family. I know. That sounds about right. Incumer cheat sheet for the family. My man, wasn't expected from me giving consensus layoffs, lack of anything to do with Linnea. Uh, oh, it's not. Isn't that the biggest thing we get returns from? Is the unexpected? At some point, that's what'll happen. Like the most unexpected thing, and then all of a sudden, Ethereum goes 100x on the money, and it's worth 2 times the amount of Bitcoin. I don't know. I don't know. I'm just saying. That's why you have some exposure. That's why we. That's exposure. That's the biggest word here. Exposure. So we have exposure, and we're going to sit back, and we're going to be comfortable, calm, collected, and watch how our exposure plays out. So I own my exposure. I'm proud of my exposure. I'm proud of all the work I put in. I'm proud of all the understanding and education that has gone into me making the decisions that I've made. I'm proud of this shit. And the Ed chart looks really great from an Ethereum denominated perspective. And Bitcoin's about to go over 85. That's wild. And Ethereum looks great, dollar denominated, just not Bitcoin denominated. Great investment. Fucking opinionated. They got so many, they're walking around with chips on their shoulders and opinions and, oh, your total net worth. This fucking chart looks lovely from a dollar denominated perspective. Too many opinions out there. Isn't that what causes conflicts? opinions. What matters is facts. Or matters is, with regard to humanity, what matters is actually being rational. Goddamn population of humans is irrational. So what's the best we can do is just be rational. Yeah, all right. I own Ethereum. Ethereum looks great. All right, Bitcoin's doing better. Cool. Good for you, bro. Good story. All right. ETH chart, Raul. Hello, my friend. Ergo, comparison is the thief of joy, right? Don't stop driving yourselves nuts. But I mean, I obviously should own some Bitcoin too, or should have, not at this price. But like the damn ETF went live at like it went live at like 47. Didn't it crash to like 41? I literally bought it when it went live, and that's when I adjusted the whole, you know, meat space portfolio. It was all at like 47. And that was the damn ETFs. We were waiting for like 50,000 years for the ETFs to go live, and everyone wasn't like, "Oh my God, just I just bought a chunk." Guess not. All right, let's wrap it up for a Monday. Thank you, ladies and gentlemen. I appreciate you spending time with me and allowing my insanity, or maybe it is Saturday. I don't know. That's for you guys to judge. To be laid upon you, and I can only hope that it helps, and I only hope that it comes off rational. So I wish you all a good Monday. Enjoy this remarkable Bitcoin price action. It is Monday, November 11th at 12:42 p.m. 241 people made it to the end of the stream. I appreciate each and every one of you that are now a little bit more rational together, and I will see you all later this week.